Alright, in this video we're going to do an example from the KISO book. I'm looking at exercise 20.10. Okay, so use my pen here. .10. Let's make our worksheet. Let's do that first. So for your worksheet, remember you got to list each item. And you're going to have pension expense. Alright. Going to have a cash column. You're also going to have other comprehensive income. And that is going to cover two different items here: prior year service costs for one, and then gains or losses. Finally, you'll have the pension asset / liability, and then over here on the other side you've got your kind of off the record, company keeps record of it but doesn't report in the financials. You got PBO and you have the plan assets. Okay, and in this problem they're going to give you the beginning plan assets are 480 and the beginning PBO is $600,000. So our net pension asset liability is a liability of $120,000. And this is all as of the date January 1st, 2020. So let's see, beginning balances. Okay. There's some other beginning balances. You have prior year service costs and your accumulated your other comprehensive income as a beginning balance of $100,000. Of course, being a debit. You don't have any beginning accumulated gains or losses, though. All right. So with that beginning, let's get into the problem. I don't see any plan amendments, so I guess we'll just start with the service cost. Like the most straightforward thing to me. Service cost is going to be $90,000. So of course that will increase your liability. Will also increase your pension expense. Next item would be the interest cost. And they gave us some sort of rate here, 9%. So what we're going to do, we're going to take the $600,000 balance there in PBO, times it by 9%. 9 times 6, 54. We're just accruing interest, as you would for any long-term liability. Okay. Then the return on the plan assets, expected return. Okay, let's get into this. We expected a return of $52,000. So it's going to lower my pension expense by $52,000. However, my plan assets are not going to go up by what I expected them to, right? They're going to go up by what they actually went up by, right? And it says actual return on plan assets is $55,000. So you got to debit this for 55. Debits must equal credits, right? So debit 55, credit 52. Where's the other 3 going to go? if you answered right here, you would be correct. It goes into accumulated other comprehensive income as a gain or loss. Okay, so that's how you handle the return. That is the true solution. In previous examples, we were kind of doing baby steps to get there, but that's the real answer. Okay, what else we got going on? Amortization of prior year service costs. $19,000. So that's how that goes. I tell you, if you think these things are impossible, you're not alone. They look impossible, but I promise you this: they're really just a lot of fun once you get them. It's very relaxing to do these worksheets for me. But anyhow, it's very straightforward. Okay, so the prior year service cost, I amortize that, which means I kind of take part of it away. Kind of like when you amortize like a copyright, or any other intangible. You amortize goodwill. Actually, we don't do that anymore. We don't amortize. That's pre-SFAS 142. But the point is, it's like depreciating an asset, right? It goes down, expense goes up, right? Simple. The other, there's a new item in this example here, is that you have an unexpected loss from a change in your PBO due to a change in actuarial predictions. So, maybe there's the corporation, the actuary just realized that people are living longer, which is great, but it's terrible news for the corporation's earnings. Now they're like, oh man, so we can expect to pay these people for a longer period of time. So you're going to have that's to the tune of $76,000. Okay, so what will I call this item? I don't know. It's your own worksheet. You call it whatever you want. I'm going to say change in assumptions. I say that because the worksheet is just a tool to get you the answer. So you can make yours messy, call things whatever you want. Okay, so your change in assumptions of $76,000, that will not be expensed right away. Okay, so while your liability will go up right away, as you can see here, where you think I'm going to stick it? You think I'm going to stick it in pension expense? No, too volatile. We're going to smooth it out. We're going to stick it right here under the gain or loss, another comprehensive income. We're going to debit that because it's a loss. We also debit it because we credited PBO. You got to have debit and a credit. Got to equal. All right. Other items are pretty straightforward. Contributions, $99,000. So we contributed $99,000 to the plan. The plan's assets will go up $99,000. And benefits paid to retirees. That's for $85,000. So, all right, liability goes down by 85, but plan assets also go down. All right, is that everything? Looks like that's everything. So let's draw a line. Let's get our calculators out. Let's add it up. Journal entry. And also, December 31st balance. Okay. So journal entry, pension expense. Let me add these numbers up. 90 plus 54, but minus 52 though. So it's really like plus 2, 92 plus 19, like 102 plus 9 is like 111. 111 0 0 0. Cash credit for 99. Okay. Prior year service costs. Credit for 19. Why not 81 though? Well, that top right there, the first row, that's the beginning balance. So that's not the change for the period. The change for the period is just 19. What is your balance at the end of it? Yeah, that's 81. All right. Gain or loss, net, you got a debit of 73 there. And since you didn't have any balance to begin with, like your ending balance is 73. Pension asset or liability. All right, we got to do a little work then. We got to look at the right hand side. Got to add all this up. 480 plus 55, 510, sorry, 535, I think. 544 minus 85. Let me pause it and do some math in my head. All right, so I did the math. And this is what I got. $735. Let me redo that 3. That looks kind of messy. $735 for the PBO and $549. Redo my 9 a little bit for the plan assets. Meaning, when I put those two together, I get my net balance. We're going to have, let's see, we're going to have a net pension liability of $186,000. So, given that we started at 120 on pension liability and we ended at 186, our change during the period is 66,000. Right? So therefore, you have the whole journal entry now. With that journal entry row, kind of highlight that one. Just your answer is right there, right? That whole row is your answer. That's your journal entry. So if I want to write a journal entry, just move it down a little bit. I would write, see here, pension expense. Okay, writing on these computers is so painful. Just missed my whiteboard. What other debit do we have? We have other comprehensive income, gain/loss, 473. We have other comprehensive income, prior year service costs, being credited for 19,000. I see we have cash being credited for 99,000. And we have pension asset/liability being credited for 66,000. Okay. So that is the answer. I hope you liked the video.